So, Mr. Owen Lee, how you doing, my man?
Fantastic. Can't
Hey,
believe summer's coming to an end, though. That's a bit
hey,
of a bummer.
hey. So we're going to talk about the merging of Fannie Mae, Freddie Mac, or
Hmm.
coming out of conservatorship, and what does that look like? Some pros and cons, and what does that mean to me as a loan officer? Before we get into that, so I got this really cool thing, man. So every morning, I have an AI bot that gives me. I
Uh-huh.
ask it, give me two of the strangest things ever. Like, give me two pieces of information of the weirdest thing ever. And
Okay.
so let me tell you what two popped out today. The two that popped out today, there's a jellyfish that can literally live in perpetuity. So this jellyfish, as it grows old, it resets, grows small back to almost a little amoeba again, and then repeats the process. So all of its cells are all new now, and it like lives
Is this
forever. Isn't
is
that
this
weird?
like the Jesus jellyfish or
Yeah,
something?
yeah. Actually, they
I
call it
never heard of it. I never heard about this.
they call it the immortal jellyfish. And this thing,
Wow.
like, yeah, and so the reason why it brought it up is we're studying how does it do it? Because you ever watch that old movie with what's that? Brad Pitt, Benjamin Buttons, where he starts off as an old man
Oh,
and
where he gets younger? Yeah, yeah,
yeah.
yeah, yeah.
And so, there might be something to that. So I thought that was I don't know why I
An immortal jellyfish.
and then the other one that popped
Wow.
up was kind of weird too. There was this dude, Michael Lotato, in 1978, ate an airplane piece by piece, a whole airplane, engine, like ate the whole thing. It took him 2 years to do it, but he literally ate the entire airplane and digested it. So isn't that weird?
I, I,
He,
I'm sorry. I completely believe in the immortal jellyfish. I'm not sure about the guy that ate the airplane.
Michael
That's a bridge too far for
Latito,
me.
I heard about him before, but piece by piece over 2 years, his stomach lining was unusually thick, so he could digest the metal in the glass. So anyway, that has nothing but nothing. We might edit that out, but I saw that and I thought, well, that was kind of interesting. I like these little weird tidbits that come every day. It gives me this little, you
Yeah,
know,
yeah, yeah.
I bet you didn't know
That's
this, So anyway, jellyfish is
I
intriguing.
knew neither of those things.
Yeah.
I knew neither of those things.
Jellyfish is intriguing. So, all right. So back to business here. So, tell us what's going on, man.
Oh, there's a lot going on, and we gotta pay attention to this. So just a couple like at a 30,000 foot view, right? And you see if I'm a loan officer in any town, USA, right? And you asked me this question early. Why does it matter? Right? Why does it matter? Well, it matters because if they get this Fannie Freddie out of conservatorship thing wrong, interest rates will rise, and they will rise approximately 50 to 100 basis points in rate. So not in price, in rate. So 6.5 goes to 7.5. 6.5 goes to 7, right? So we got to pay attention to make sure they're getting this right. So big overview, Fannie Mae, Freddie Mac, two gigantic financial institutions created in the 60s and 70s to buy mortgages from banks so that banks could have relief on their balance sheets and then go make more mortgages, right? That's their core function. They made money, millions and billions of dollars for years and years and years, started to do during the Clinton administration, and then continuing during the Bush two, not Bush 2.0, but the second Bush administration, started to do things that today would be considered non-qualified mortgages. Weren't really the worst of the worst subprime, but were
Yeah.
subprime-ish. Got themselves in trouble and got thrown into conservatorship. Basically, the United States government took them over. Now you go back to that time, right? The banks, right? I forget which one. They let Lehman Brothers go under. They let
Yeah.
Bear Stearns go under, and
Yeah.
then they drew the line and stopped letting other ones go under. TARP money given to banks. General Motors and Chrysler, government going into bankruptcy, government taking a stake. All that stuff that happened, right? All that stuff is done. All the TARP money's been paid back. General Motors, totally private companies. Chrysler, Jeep, totally private company. Not Fannie and Freddie. 17, 18 years later, they're still in conservatorship. Why? Well, they made billions of dollars for the U.S. government over that period of time. But now President Trump wants to get them out of conservatorship or at least recapitalize them. There's a lot of conversations about, he had the heads of the 6 largest banks in about how they would do an IPO. Do they do an IPO for both of the entities? Do they combine them and do an IPO in one entity? Most of the conversation is around the so-called capital stack.
Okay.
And if you're watching on YouTube, I'm making fake air quotes with my fingers. If you're listening on the radio, you can't see that. But it's about how they're going to be funded, what's going to happen to the shareholders, the bondholders, all that stuff. Very little conversation, disturbingly, about what the rules are going to be. Are they going to be in conservatorship? How's that going to work? Are they going to go out of conservatorship? What are the rules going to be? There's 2 ways that this can be done. It can be done legislatively by Congress. I think there's 0 chance that that happens because they would have to get 41, or they would have to get 60 votes in the Senate to not have it be filibustered. I don't think there's 40 votes with a 53-47 Senate. I don't think you're going to get 7 Democrats who are going to say, yes, we should get them out of conservatorship. So they have to do it administratively, which means a lot of rule changes. We're not paying attention. We're not having conversations about the rules. And that's what's going to affect whether or not they get it right and whether or not interest rates go up. So we were actually talking about this on the Breakfast Club earlier, Carl. If they get it right, nobody will notice. Interest rates won't go up. If they get it wrong, everybody will notice, and interest rates will go up. Or interest rates will go up more than a minor amount. So that's why this is important. And there's so many headlines and kind of news by tweet or X or Truth Social post. This is a serious topic. So we need to pay attention and make sure that the most serious people are the ones working on this.
So if they, because it's really 2 things that we're talking about here. One is coming out of conservatorship, and then the other is whether or not they join together and become one entity. If this was to happen, like if they were to come out of conservatorship, how big of a deal is it? Let me ask percentages. This is just your estimation, right? But it's an educated estimation. Do you think they're going to come out of conservatorship in the next 2 years?
2 years, yes.
And do you think it's going to be 1 or 2? Is this going to happen at the same? Like, if they come out of conservatorship, do they come out as either 1 or 2, or no? They're going to come out as 2, and then maybe join together to be 1.
Well, they still exist as separate companies, so they would have to be merged together corporately in order to come out as one company. Ultimately, I think they'll stay 2 companies, but it is a question that we have to pay attention to because there's a lot of chatter about merging them. People who are not in the industry don't understand that these are 2 companies that, when operating properly, are competitive with one another and are looking to provide different service and different value to banks and mortgage companies that are actually on the front lines making a loan. If 5,000 people listen to this podcast, Carl, 4,900 loan officers of those 5,000 people have probably had an incident where they've got a mortgage approved through the automated underwriting system of Freddie and not of Fannie, or vice versa. If there are owner-operators like myself on this call, you've experienced a time where Fannie and Freddie have handled repurchases differently. So merging them into one company, we were joking earlier, like, show me one instance where there's one large utility, and ultimately that's really what Fannie and Freddie are. They buy mortgages from banks, either independent mortgage banks or traditional depository banks. They buy the mortgages, and so that you can go out and do what? Make more mortgages, right? So they have a utilitarian function. So just show me one example where the government has set up one utility like that and it's worked well. Like,
Yeah.
you know,
Hey there. Hey, if you're loving the tips so far, be sure to hit that subscribe button right down there and then tap the little bell so that you never miss out on more free, cool tips coming your way. Also, I would love to hear from you. Drop a comment beneath there. Let me know what you think or tell me what you'd like to hear next. Yeah, they're not.
your example of the post office earlier today, perfect
Yeah.
example.
Yeah, they're not. They're
Do you
not.
want to emulate that?
Yeah, they're not incentivized to operate well, whereas and I get it, it's not I'm not bashing the government or anything. It's just the nature of the beast that if you're incentivized by profit on making something profitable and run well, it's going to run well. If you're paid the same whether it's profitable or not, you're not going to run quite as hard, right? It's just human
Well,
nature.
there's this phrase in Washington, D.C. circles that's going around called the HUDification of Fannie and Freddie,
Mm,
which means if they're in conservatorship, they're losing their entrepreneurial private company roots. They're acting more like HUD. I think that's kind of an unfair statement because Fannie and Freddie buy and sell mortgages. HUD is really at its essence, or at least FHA at its essence, is a mortgage insurance program.
yeah.
So the two are not the same, but the thought process of you're getting to be more like the government, it just means you're losing your entrepreneurial spirit.
Hmm.
And we need to protect that because it serves the industry well. When Fannie and Freddie are both looking for loan programs where they can make more qualified loans to borrowers, you know who wins? Borrowers.
Hmm.
So we need smart people thinking about how to do this well.
Hmm. So for me as a loan officer, or me as a branch manager, and just
Hmm.
just for compliance purposes, I'm not a loan officer. I'm a branch manager, right? So I'm
Yep.
a non-producing branch manager. I just want to. Anytime I say me as a loan officer, that's meant as a hypothetical situation for
Yes, sir.
those three attorneys that listen to my podcast. I just wanted to throw that in there. But
Yeah.
so for a loan officer or me as a non-producing branch manager, uh, how will this so if this goes right, will this affect me at all?
Hmm.
Like, is this kind of like no news?
Shouldn't. Yeah, shouldn't.
And if they
You should be fine.
and if they don't do it right, and let's not talk catastrophically, they just instead of catastrophic, they screw it up. What does that mean to
Yep.
me?
Simply stated, interest rates will go up about 50 basis points in rate.
Okay.
So instead of if you're, kind of the prevailing interest rate with a few points or whatever
Hmm.
people are looking at right now is 6.5, it
Yep.
might be 7.
Yep. And I'm going to timestamp this. As we're recording this, it's August the 28th. I think this episode goes out. I can't remember if it's Saturday or Monday that they've released this, but so this will be
Yeah.
3 4 days old when it
Yeah.
hits the platforms.
The biggest issue as it relates to this is really the guarantee. And I don't want to wrap up the podcast without at least mentioning this. So when Fannie and Freddie were created by acts of Congress, they had language about an implicit guarantee. It wasn't obvious, but it was implied that the federal government would backstop or guarantee the financial bonds and the payments on those bonds issued by Fannie and Freddie. And that's exactly what the federal government did when they put them into conservatorship. They gave them money to make good on the bond payments. So for decades and decades, Fannie and Freddie operated well with the implicit guarantee, and then there was a period of time where they didn't. And that implicit guarantee was made explicit. Most people believe that while in conservatorship, they are operating as if they have an explicit guarantee. So we've moved from an implicit guarantee to an explicit guarantee. Now, or at least what's perceived as an
Hmm.
explicit guarantee,
Hmm.
and now coming out of conservatorship, do we go back to the implied nature, the implicit guarantee, or do they say in the corporate documents, these bonds are backed by the full faith and credit of the United States government.
Hmm.
And that's why the industry is arguing for the explicit guarantee. The MBA's position, explicit guarantee, two or more GSEs need competition, right? When we go from what's often perceived as an explicit guarantee back to an implicit guarantee, how much are rates going to go up? I would argue nobody really knows the answer to that question.
Hmm.
Everybody is just guessing. Some guesses are more educated than others. Most guesses that I've seen are somewhere between 25 and 50 basis points in rate in a home mortgage,
Hmm.
but nobody really knows.
And so, and I think we mentioned this on the Breakfast Club too. Which, by the way, if you're listening to this and you're not part of the Breakfast Club, boy, you ought to really be a part of that. There's some really good conversations going in there. But like
Yep.
having it, I guess one way to look at it that I just described in simplistic terms that I can understand easily is like the way it is now. When the bonds are sold, it's backed by the strength of the U.S. government. That hey, whether
Mm-hmm.
as much bickering as we have, the U.S. government's pretty darn stable. I mean, as far as is it going to be here tomorrow? Investors bet very heavily on it. Couldn't be a better.
Well, it's the most stable government in the world, right?
Yeah,
That's the way the financial people. So it
it's
has its
solid,
problems,
but it's solid.
but it's only better than every other one.
Yeah.
Oh,
And so,
yeah.
and then if it comes out of conservatorship, now you're buying bonds backed by a company. And the example that we
Mm-hmm.
gave on the Breakfast Club this morning was like, it'd be like buying a bond from Kmart back in the 80s, where it was an amazing powerhouse. We all kind of made jokes about where'd you buy your tennis shoes from
Yeah.
Kmart, and which I did, by the way, back then.
Well,
But
you got those bonds at a discount because the bonds were on blue light special.
that's right. That's right. But and you think, well, and back in the 80s, you went, man, this huge powerhouse,
That's right.
and now there's literally one Kmart store left in the nation. At last I
In
checked.
America,
Yeah,
yeah.
there was one
Yep.
left. And so you're going from the backing of the government to a backing of a huge company. But again, huge companies like Sears, Kmart, and any number of Woolworths back in their day, and I'm going back a little
Oh,
ways.
yeah.
It's higher risk, so higher risk, it's gonna cost a little bit more, and it doesn't come with
Mm-hmm.
the same solid back guarantee. So it'll be interesting to see how this plays out. What's your best guess?
My best guess is that they do something where they push. Because the one other aspect of this, and I promise I'll get to answer your question, is there are millions of shareholders and bondholders that have essentially been on hold for 17 years,
Hmm.
right? And those people make political donations, and these are the kind of cold calculating political donations where they donate to the left and the right because they want to be friends with whoever's in power. So this is
Yeah.
not a political statement,
Hmm.
right? So you got to watch the money, like all things, follow the money. So I think what's going to happen, if I were guessing, and this is just a semi-educated guess, is they will do something with the capital stack, the ownership, the
Hmm.
funding of the companies late this year, or at least try to do it late this year.
Hmm.
But the actual work of getting them out of conservatorship, what that will look like, what the rules will be, and those kinds of things will be more 2027-ish because they don't want to mess with that before the 2026 midterms.
Hmm.
If they get
Hmm.
it wrong and home mortgage interest rates go up 75 basis points, that's bad for the midterm elections.
Hmm.
So I think they'll do something with the money side of it, or at least try very hard late this year, early next year, and then the actual work of, the congressional elections are November of 2026. Shortly after that, official Washington goes home for Christmas. So I think somehow that work will start in 2027.
Hmm. Very good. Cool, man.
But this is one of those things where, as an industry, we have got to pay attention,
Hmm.
right? Because if it goes well, we won't really have to do much of anything. If it
Mm-hmm.
doesn't go well, we have to show up and show up fast. We have
Mm-hmm.
to be prepared to advocate on a half a dozen super serious issues. And if all goes well, we won't have to advocate on any of them. And
Mm-hmm.
if the world goes to hell in a handbasket, we're going to have to advocate on all of them.
Mm-hmm.
So we got to be prepared. So if you want, find me on LinkedIn, really easy, Owen Lee. I promise you I will watch and post about this issue. Join the Mortgage Action Alliance. You will get alerts from the MBA. Just Google Mortgage Action Alliance. Go and join. If you think you've joined, go and join again because your membership expires every year. You have to rejoin. And stay involved because we need you
Mm-hmm.
and we need everybody in this industry to show up.
All right, and we'll put a link to both of those. We'll put a link to both of those here in the show notes. So cool, man. All right, brother. Well, we have actually you and I both have a meeting here in about 5 minutes, so I guess we'll hit
That's
the
right.
record. And I'm going to give a little tease here just for a second. So the next episode you and I are going to do, which is going to be the very next one they'll hear. So we're going to the so this episode's going
Mm-hmm.
out, and then the very next one we're doing uh, has an industry shattering unfair advantage. And so don't miss I'm not, and if you think I'm overhyping, if after listening to the next episode you think I've overhyped it, you let me know. You let me know. But
I would just say that if you're worried about AI passing you by, tune in to the next podcast.
yeah, good stuff. All right, we'll leave it on that. So, hey, thanks, guys. We appreciate you, and we'll be sure to hook up with Owen on LinkedIn, and appreciate your support on the alliance. And we will see you on the next episode. Thanks again, Owen. Appreciate you, brother.
Take care, Carl.